A financial shock far bigger than anyone expects may already be in motion. Many experts believe the U.S. government could target Bitcoin the same way it targeted gold in 1933, and Trump's new policy signals look eerily similar. If this four-stage playbook returns, a $37 trillion crypto reset could blindside millions. Most people think Bitcoin is untouchable, but history proves no asset is ever truly safe when the government feels threatened. In 1933, Roosevelt seized private gold overnight using a single executive order. Today, analysts warn that Trump's recent statements, national security language, and regulatory hints resemble the same structure used before the gold confiscation. With Bitcoin projected to reach a multi-trillion-dollar valuation and institutions rapidly adopting it, the youth may see it as both a threat and an opportunity. This video dives deep into how the 1933 pattern could repeat, why experts fear a Bitcoin seizure scenario, and what signs every investor must watch. In 1933, Americans woke up to news that would change their financial lives forever. President Franklin D. Roosevelt had signed Executive Order 6102, making private ownership of gold illegal. Overnight, millions of citizens were forced to hand over their wealth to the government at a fixed price. It wasn't a request, it was a requirement backed by law, penalties, and prison sentences. The government justified it as an emergency measure to stabilize the economy, but the real purpose was about power, controlling the monetary system. This single move reshaped the financial world and proved the government can and will intervene when it feels threatened. And what's happening today with Bitcoin is following the same dangerous pattern. So what's the first warning sign that history is repeating? Keep watching. Donald Trump has been publicly supportive of Bitcoin, but behind the scenes, analysts argue a very different picture is forming. Several policy advisors around Trump have hinted at using national security authority over digital assets, just as Roosevelt did with gold. Executive power can override normal procedures, and it only takes one signature to trigger a nationwide order. Recent statements from Trump about protecting America's financial dominance sound eerily similar to the justification used in 1933. Experts believe that if Bitcoin becomes too large and begins weakening U.S. monetary control, the government will respond aggressively. The tools are already in place, and Trump has shown he's not afraid to use executive authority. But what would a modern confiscation even look like? The next chapter reveals the four-stage playbook. If the government wants to take control of Bitcoin, it must first create a justification. In 1933, the threat was hoarding gold. In the modern world, the easiest excuse is national security. Authorities could claim Bitcoin enables terrorism financing, foreign manipulation, tax evasion, or destabilizes the U.S. dollar. Once labeled a national security risk, the government gains extraordinary power to regulate or restrict it instantly. This first step is designed to make the public believe the move is for their own protection, not for control. Several U.S. agencies have already used security language toward crypto, which experts view as a red flag. And once the threat is declared, the next step becomes unavoidable. What happens next will shock most investors. The second step in the playbook involves going after the easiest targets, centralized exchanges. Just like banks were pressured in 1933, crypto exchanges can be ordered to freeze withdrawals, halt trading, or surrender customer data. The moment this happens, millions of investors lose access instantly. The order wouldn't need to confiscate Bitcoin directly. It would simply block access to it. The U.S. could also force custodians to hand over all assets related to wallets with U.S. residency. Once exchanges freeze Bitcoin, panic would erupt globally. And because over 70% of crypto activity passes through centralized platforms, the freeze alone will be enough to crush market liquidity. But the next stage is even harsher, and it hits individuals directly. This is where the 1933 pattern becomes undeniable. After freezing access, the government could demand that all citizens report their Bitcoin holdings or convert them into a government-approved asset, potentially a Fed-issued digital currency, or a regulated Bitcoin certificate. The idea is simple. Eliminate private control. Just like gold holders were forced to turn in their gold for a fixed price, Bitcoin owners might be compelled to exchange their coins at a government-defined valuation. Failure to comply will carry penalties. Just as it did in 1933, this would mark the biggest transfer of wealth in modern history. But what comes after forced conversion is the final blow, and it changes the crypto world forever. In 1933, after seizing gold at $20.67 per ounce, the government immediately revalued it to $35, giving itself a 69% profit overnight. The same strategy could be used with Bitcoin. After taking control, the government could raise its official price, strengthen its balance sheet, and dominate the crypto market. This would allow the U.S. to regain monetary power while everyday investors lose billions. Analysts believe this is the real motive behind any potential confiscation. Not security, not regulation, but profit and leverage. Once the government owns a significant share of Bitcoin, it controls the future of digital currency. But how likely is this scenario today? The clues are hiding in plain sight. Worldwide, countries are accumulating Bitcoin, launching digital currencies, and preparing for a post-dollar reality. Nations like Russia, China, and even small economies are exploring Bitcoin as a reserve asset. For the U.S., losing control of the global financial system is not an option, and Bitcoin's rise threatens exactly that. As more wealth moves into decentralized assets, the Federal Reserve's influence weakens. This is why many analysts warn the U.S. may eventually take drastic action to protect financial dominance. The more Bitcoin grows, the bigger the threat appears. So what can everyday investors do if this scenario becomes real? That's where the final chapter becomes crucial. Whether or not a confiscation happens, one thing is certain: governments will not sit quietly while Bitcoin grows into a multi-trillion-dollar rival to the dollar. Investors must prepare now. Private wallets, multi-signature setups, decentralized exchanges, and global diversification are becoming essential tools for financial survival. Understanding jurisdiction risks is now as important as understanding price charts. The key is staying ahead of policy changes rather than reacting to them. This video is not about fear, it's about awareness and strategy. Because history shows that those who prepare early protect their wealth, and those who wait lose everything. And the final message will bring all of this together. Don't miss the closing. As we've seen, the $37 trillion Bitcoin threat is indeed just a financial story. It is a direct challenge to government control, global power, and the entire monetary system. Whether a modern-day 1933 reset ever happens or not, one thing is certain: the world is entering a phase where digital wealth, national security, and political decisions collide like never before. And the people who stay informed, not scared, will be the ones who protect themselves and rise above every crisis. That is why channels like Money Timeline exist, to give you clarity when the world gives you confusion. If you want to stay ahead of the coming changes, understand the hidden agendas, and learn how history is repeating in real time, make sure you like this video, subscribe to Money Timeline, and turn on notifications. The next financial reset is already forming, and you won't want to be here when we break down what happens next.